Hello and welcome back to All Things Money. I'm your host for the show, David Blain. We thank you for joining us today. We've got an excellent show. We're talking a little bit about some of the high-frequency traders on Wall Street. You may have heard about these folks, what they're doing. What I want to do is give you some insight into who they are, what they're doing, mostly to encourage you to stay away from them, that they have way too much computing power for the individual investor to compete with. That the way the individual investor makes money in investing is you decide on a set of long-term goals and try to minimize the amount of trading to reach them. Set an allocation that has a reasonable chance of meeting your goals, and then only in response to either over or undervaluation or severe problems in the economy or something like that. But just try to trade infrequently and stay away from these folks, these high-frequency traders. A couple of things, even as Fannie Mae and Freddie Mac and AIG, as their stocks were going down and down to zero, you saw millions and millions of individual investors continuing to trade in these what I call zombie corporations. I saw it years ago with Enron and MCI WorldCom, and I can't emphasize enough that if you're buying, someone else on the other side is selling, and if you're selling, someone else is buying. And so the idea is try not to trade at all. Let the capital markets do their job and help you accumulate wealth over a long period of time. So let's talk a little bit about who may be on the other side of your trade. High-frequency trading has really morphed into what they call a technology arms race. Huge companies like Goldman and Barclays Capital and hedge funds like Citadel, they're in Manhattan, trading in these huge server farm type environments. So let's talk a little bit about that. Here's talking about Infium Capital, is one of the biggest market maker natural gas futures and runs its computers in a 100,000 square foot office near the Chicago River. So they have 100,000 square feet of computing power. The core of its operation is 40 racks of servers overseen by quant traders who man up to a dozen screens each. So 40 racks of servers, this Infium Capital that trades in natural gas futures. Infium's operation runs on a piece of the public electricity grid backed up by two separate power stations, substations, and 196,000 pounds of batteries. And so they're reasonably sure that they're not going to run out of power to power this 40 racks of servers. Still, the system's not safe enough, according to Infium Capital, and so they're paying to install a 2,000 kilowatt diesel generator just in case the two separate power substations that currently power their operations go down. Infium taps into the CME Group's computers via dedicated fiber optic lines capable of transmitting 5,000 orders per second with a lag time of no more than 10 milliseconds. So these folks have a dedicated fiber optic line that are capable of transmitting huge amounts of orders with virtually no lag time. And so what you see sometimes is by the time your individual investor puts an order in, their computers see, say, an order going in to buy 100 shares. Well, their computers and their things are so fast that what they're doing is they can actually get their order in ahead of you and front run it, shave a couple of fraction of cents off that trade, and they're on to the next trade, all automatically. Tech centers, 6 square feet of space in the data center where the big exchanges house their computer goes for $2,000 a month. Okay, because even going from Chicago to New York, you have this millisecond lag time. So where some of these large exchanges are housed, they're renting space for 6 square feet for $2,000 per month in their data center. And so for $2,000 a month, you can put your server in 6 square feet of space right next to some of the exchange data center to get that much more of an edge. Many trading firms spend 100 times that to house their servers, and the New York Stock Exchange plans to open a 400,000 square foot tech center in New Jersey. Once again, these hedge funds and high-frequency traders, they're buying just a fraction of the space to put their server right next to the servers of the New York Stock Exchange. So anyway, if you want to play this, what I would call loser's game, these trades that are made in the blink of an eye, 1,000-share bids and offers that are front-running the average individual investor, it's a game that I really would encourage people to stay away from. These firms are scooping up a spread of a tenth or a hundredth of a penny, thousands of times per day on billions of shares, and that's how they're making their money. And so really only a fool would attempt to challenge these folks and their what they call new singularity. So we once again would encourage you to keep the trading down to a minimum, set a long-term set of goals, set a long-term allocation that can reasonably get you there. Certainly, as asset classes become overvalued or undervalued, we would want to purchase more of the undervalued and sell the overvalued, but keep the trading down. So that brings us up to our next break. We'll be right back after a few short messages.